Hi, thanks for visiting Phil Sharp Homes. This is Phil, and this video is about choosing a lender. I always try and start these videos by stating the obvious, and stating the obvious and choosing a lender is a little bit complicated, but most people start by looking at price, and prices first. The thing with choosing mortgage lenders based on price is the fact that they are heavily regulated. The money all comes from basically the same place, and their interest rates are all essentially the same. Now, they will advertise teaser rates, they will advertise rates based on the person who is just absolutely perfectly qualified with a max credit score and max income and no debt and so on and so forth. But when it boils down to it, I think you will find, and I do encourage comparing lenders, I think you'll find that when you have two lenders qualify you and actually quote you rates and closing costs based on you as an individual, you're going to find out that they're going to come up with almost exactly the same thing. Because again, they're following the same rule book that's prepared and given to them by the federal government, and the money all basically comes from the same place, the federal government. In the case of VA loans, the VA loan guidelines are written by the VA, and the lender has to follow them if they want to continue making VA loans. On kind of a side note, a VA loan is not a loan from the Veterans Administration. It's a loan from a private lender that is guaranteed by the VA. And of course, that private lender has to follow the VA's rules in order to make VA loans. And some of those rules restrict prices and fees and so on and so forth. So that's why they're all, usually they all end up being about the same. There are a lot of differences between lenders, though. There are mortgage lenders, and then there are mortgage brokers. And I'm going to use a term that in the industry is used a little bit differently. I want to use it here, and that term is mortgage originator. The difference between a mortgage originator or a lender and a mortgage broker is that the broker is going to go out and prepare your package of documents and materials and so on and so forth, and then they're going to go to a lender that they work for and broker the loan. So there are mortgage brokers who will go to Wells Fargo or Bank of America, wherever, with a package, a pre-qualification package, and they are brokering that loan for another lender. So essentially they become a middleman. Although the broker may not charge more money, they always seem to take more time. There are more hoops to jump through and more rules to follow because of the additional layer of complexity. A mortgage lender, and both of our preferred lenders are mortgage lenders, not brokers, makes the loan in-house. Although they're not actually writing a check, you could almost say they are the ones writing the check. And because of that, the process is usually much more streamlined and much quicker. I mentioned in a previous video the difference between one of the large national lenders that a lot of military folks are familiar with and a local lender here in Olympia who has a really good rep. That local lender here in Olympia originates mortgages in her office and typically closes VA loans in about 3 weeks, whereas the big national outfit, although they originate loans, they're a big bureaucracy, and it takes them 6 to 8 weeks to close. So even with originators, there can be big differences, but originators in general will make for a more streamlined process and a much quicker process. And for those of you in the industry who want to take me to task on using the term originator, feel free. I'd love to discuss it with you. The lender's reputation is another really big issue that most people don't even consider. Real estate markets are local. Real estate markets, everybody in the industry knows everybody else in the industry. I know every realtor who does even a few transactions a year in the JBLM area. I know who they are. Same with lenders. I list properties. I receive offers on those listings that the financing is coming from lenders all over the place, and I get to know them, know how good they are, know how fast they are, know their reputation in general. So using a lender with a good reputation can go a long way when you're a buyer towards securing a deal that's the best possible deal for you. When I receive an offer that includes a pre-qualification lender from someone that I've never dealt with before, or someone that I've dealt with before and had a bad experience, I'm going to convey that to the seller. I'm going to tell the seller, hey, you know, the last time I worked with this lender, even though it's a big national bank, let's say, it took almost 60 days to close, and there were all kinds of problems, and it almost didn't close, you know, what have you. So that reputation is huge. Using the local lender that I've mentioned before, who has a good reputation in the area for closing quickly, can mean the difference between having an offer accepted or not accepted. And I've had offers accepted that were competing with another offer. Let's say that they were even a ways off in price, but one offer offered or made the guarantee of closing in 3 weeks. The other one said 5 to 6 weeks. Well, that might mean the difference in a mortgage payment to the seller, and a couple $1,000 mortgage payment is a couple $1,000 mortgage payment. I've had offers accepted that that were maybe not quite as strong as a competing offer. The only reason they were accepted is because the lender was a known quantity and the seller knew that they were going to close and they could move on based on the advice and counsel that they received from their agent. So anyway, choosing a lender from that perspective is also very important in addition to the cost. Using the seller's lender, a lot of sellers, especially builders, and even some foreclosures now, will require that you pre-qualify with their lender before they will consider your offer. The builders always back down from that. It's a technique. It does two things for them. It ensures, if you qualified with their lender, it ensures that if there's a problem with your lender, that you can then move over to their lender and they'll be able to close the deal. Of course, that's kind of a secondary thing. The primary thing is they want you with their lender because there are financial arrangements between them and the lender that benefit the seller. So I tend to get kind of upset when I see a listing that says must qualify with the seller's lender. And with builders, they always back down. I never have buyers qualify with builders' lenders. In the case of foreclosures, some of the banks will not consider your offer unless you pre-qual with them, and that's kind of understandable, and mainly what they're doing is just checking your credit to make sure that you're not working with some fly-by-night lender who didn't properly qualify you. Usually in the foreclosure scenario, it's a very streamlined pre-qualification process. It can be done over the phone in about an hour, and like you say, all they're doing really is just pulling your credit and making sure that you're not a flake before they move forward and accept or negotiate your offer. So the last thing I'll say about choosing a lender and pre-qualification, and I've talked about this in the pre-qualification video, is surprises, credit surprises, that sort of thing, the unexpected. And in choosing your lender, you need to choose somebody who's going to be able and willing to counsel you on what's in your best interest and what will provide you the best result. And again, a lot of the large national lenders either can't or won't do that, whereas hiring a local lender who knows the local real estate market, who knows the state laws, and who understands what's going on a micro rather than a macro level, can be really, really beneficial. And having a lender who will counsel you, prepare you in advance to get the best terms possible is very, very important. So I encourage you to carefully, or to be very careful in choosing your lender. Oftentimes the recommendation of your realtor is going to be the lender to go with because that realtor has worked with a lender, and the lender's established a track record, so on and so forth. And by the way, it is illegal for a realtor and a lender to collude, to exchange money, to do any of that sort of thing. And I'm sure you've heard on the news and throughout the financial crisis of realtors and lenders who did things like that, and most of them are in jail now. So the material presented in this video is available at the Download Center. I encourage you to go there and download it. We offer a lot of other resources on the website. The one I will mention is relocation packets by U.S. Mail. You can request one from the homepage of the website or from the relocation department. Thanks again for visiting Phil Sharp Homes. This is Phil, and this concludes this video.